Test, test. There we are. Happy Friday, traders. Sorry about the delay here. It's 8:03 a.m. Chicago time on the 1st of November, 2019. Welcome to a new month. Please let me know how the sound is. Too loud, too low. My Bluetooth mic, I guess, was discharging and didn't charge overnight, and so I had to switch. That's the reason for the delay. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market right now looks like risk on. We are gapping up above yesterday's range. Remember, yesterday we opened in the S&Ps and NASDAQ and the Russell and others, and dropped from the open. Yesterday looked like a trend day down. And today's actually bouncing right on top, just pushing over. So you go deal with that. The non-farm payrolls came out. There's a lot that came out overnight, but the key figure that's released globally is the non-farm payrolls in the U.S. came in at 128,000 versus 89 consensus, and so. Pretty strong. The market popped up and has been holding sideways. Not much action really off that number. I mean, it moved. Looks like the SOC was. What was the SOC? The SOC, here it is. The SOC was 30.39, right on top of the MC point of control for the last few days. I'll show you what that looks like. And from there, we took off. We pushed about 9 points higher, and we've been kind of gliding upwards since then back into the 30.50. Remember, 30.57 has been a big target up above. So that's where we are. The leader today is crude. Crude is responding to a Chinese factory data, but set for weekly loss, it says. There's also a release from Iraq saying that their production is off by 48% due to these riots and things like that. There's a lot on the news. Brexit is really coming to the forefront with the upcoming vote, with Nigel Farage basically contesting how it's being done and so on and so forth. There's a lot of drama there. And, of course, the China-U.S. Saga. It's like more episodes than Star Wars at this point. Maybe it will go for longer. So that's where we are overall. Let's take a look at what's on the calendar ahead. We had our unemployment, and we get ISM manufacturing. That's a high figure. That's a high impact figure. ISM manufacturing PMI at 10 o'clock Eastern, looking for 48.9. That is likely to be a mover. And then we get Feds Williams at noon, Feds Clarita at 1 p.m. Eastern, and Quarles, and then Feds Williams at 2:30 as well. So that's where we stand. Let's take a look at what was expected yesterday versus what we got in our hold your feet or look at yourself in the mirror segment. The review here, the expectation yesterday was for the market to likely push lower. The primary expectation, though, given where we were opening right up here, the expectation was we were likely to push higher into the 30.45 area before we sell off. And then the key target for a sell-off is that 30.32 area, the point of control. And, of course, with the noise, the expected noise that is the result of the MCV at 30.39. And as I said yesterday, there's a little bit in the way here at 30.35. I circled these. I outlined these. 30.35. There's some price action as well as volume profiling stuff going on there. So that's what I was looking for. An open auction that attempts higher, sells off. I was modest with the range, and then a bounce into the close. That was scenario one. Scenario two, a drop immediately into the 34, 35 area, and then a push higher and above the 30.50 to take out the 30.50. That, of course, didn't happen. Here's what happened. Here's basically what happened yesterday. Let me clear this out. So we essentially had this open auction, just like what was expected under scenario one. Except I was looking for it to drift, but it did get to around 30.45. That was the target above. And then I was looking for it to roll over and sell into the 30.32 area, which it did. Got a little bounce here, 30.32 to 35, and then it continued lower. And so that's it kind of did what it's supposed to, or not supposed to. Oh my God, that's a terrible thing to say. Not a good use of language there. It did what was expected on the drop, but then it continued lower. It went into 30.22, and then it generated this really, in my opinion, a picture perfect setup for the short. We have what basically was an extension down below the prior range, and then we came back, and the mid, which is this blue line, the mid lined up with the prior day's point of control and the day before that's low, with the 30.35 just behind it to set a reasonable stop with a good risk-reward ratio trade setup. So we do have a market that's run away from the mid and VWAP. It doesn't quite show as an impulse here because of the time frame, but really this is a pretty good drop, behaving almost like an impulse. Pulls back to the mid, works through the point of control VWAP. The prior point of control, VWAP, mid, and the low from the prior 2 days, with clearly defined risk at the 30.35, which I drew a line on yesterday, giving us a 2-to-1 play back to the IB and a 4-to-1 play down to the low. Okay, so it rolls over, it consolidates, and then it gives us that IB trade, the IB exit. And then it holds and turns 4 ticks below the low. We get into the afternoon lunchtime consolidation. Higher low, 30.20, 30.21 and a quarter, 30.21. I'm not sure where I did it. I believe it was in the Convergent chat room. I was talking about watch out above, as it looks like it's likely to bounce for that turnaround as outlined in scenario one as expected. So overall, pretty decent action yesterday. Did not catch the sell right off the open. I'm just not built for that. But the rest of it was fairly methodical. Here's the overnight session since then. We closed at 30.35.75. Remember, 30.35. 30.35. So 30.35, 30.39. Right in here, 30.39, and then above us, 30.50, and above that, 30.57, above that, 30.60. Those are the key areas above and below. See these, how they fit on top of those stock zones? See, up. You just got to know them by heart. The stock zones kind of help us see them, not forget, but they clutter up the screen and people get really distracted. But those are the key areas above. Key areas below, anybody? Do you remember? Do you remember the big areas below? Anybody? 30.14, 30.15, 30.20, which is where we turned yesterday. And then below there, 30.05, 30/30.04, and then 3,000 millennium figure. You got to know your areas. You got to know where the market has responded in the past and what areas are ahead, above and below us. You got to know them. And that gives you the confidence. That gives us all the confidence to observe when we need to observe and just sit back the rest of the time and not take action and lose money because we're in the middle of nowhere. right? We pre-identify these areas. Very, very important. So yesterday it ended up tagging a pretty good area, and then beneath there, 3014, 3015 is a key support, at least on the first touch. So we open up, we spend a little bit of time below the close, but inventory is long, and it definitely got longer based on the non-farm payrolls. So the overnight inventory is long, and we are pushing into the 3050 area, and building another distribution up there. The market is liking this up here, and so we have a multi-distribution profile with 3041 being mid and the overnight point of control. Pretty short-term important area right here, 3041. We'll see how the market behaves, but to me it looks like we may see a small pullback to balance the inventory a little bit, and then likely to continue higher into 3057. That's, well, kind of giving you the scenarios ahead of time. Let's take a look at the order flow for a minute. Again, this is ctbookmap.pro on Rhythmic, which is my favorite feed now. Rhythmic is a full MBO feed. So now we can get the iceberg indicator working properly and with accurate data. The iceberg indicators, the iceberg indicator is what's giving us these numbers here. It just shows, it's an algorithm that tries to identify if an iceberg's at work there. So what do we have above us? 3050 liquidity. We've pushed into that and are sitting sideways. Other than that, the book doesn't have much until 3055, which was the high a couple nights ago. And then 3057. It looks to me like the easier path is upwards, of course, unless somebody somewhere has bad news that we're not aware of. But, you know, I'm listening to 3 news feeds to try to capture whatever happens there. Not that I trade the news specifically, but I like to know what's going on. So you see how this stock zone here, lines up with the liquidity. That's the sort of thing I want to look at. And then it's up to me then to judge how the market's approaching and what the context has been, or the narrative has been since the open. I did a small segment yesterday, and converted it into a trade wisdom segment, separated it out, distilled it, refined it, and put it up separately. And I invite you to listen to it because it kind of outlines how these scenarios work. I'm posting that tweet for anybody who wants to take a look at it. I'm posting the tweet into the chat box, the YouTube chat box, if you want to check it. If you don't see it, of course, since you're on Periscope or something else, or on our website, the Convergent Trading website, just drop me a note on Twitter or at futurestrader71.com/contact. And it just provides, I'm going to keep posting that, just to provides what it is that I'm doing, because people come in and they're like, what is this guy doing predicting the market? You know, respond, trade, don't predict. I'm not predicting. So a little refinement there in terms of how things are described. So this is what the order flow looks like. The liquidity is above us. The liquidity is above us right now. It's fairly thin. If the market is not able to push higher, now, generally speaking, liquidity attracts price, and there are some mechanics that go into the reasoning behind that. Not always. Nothing is 100% guaranteed in trading, of course. But generally, the market, there's a tendency for the market to move towards liquidity. It's counterintuitive. People see liquidity and they think it's a big barrier. But remember, the market's job is to facilitate trading. The maximum number of buys and sells meeting is what the market is after. It's constantly trying to discover what that price is. So having Having the liquidity above us is interesting. I want to see immediately how that's responded to on the open. If it's not able to push through the liquidity, then I'll look short for a return to the scene of the crime, which is also the MC point of control down here at 30.39. We'll see. Anyway, that's more than I wanted to share with regards to order flow. Let's take a look at what we're expecting for today, but it is like Friday, so take a moment, please, at some point before you leave to hit the like button on YouTube. It may request that you log in. If you're on Periscope, just hit the like button there, and hopefully that'll register. It gives others the ability to find my channel, and it helps me out. Doesn't cost you anything. Here we are above 30.49, trading 30.50, mid-century figure. Likely to chop around in here. Big strike. Price, the primary scenario, as we play around in here, the primary scenario is an open auction that attempts to revert back, likely to get tangled up here, impulse up and out, push the overnight high, and then consolidate in this 30.57 area, 30.60. There are multiple up here. There are multiple measured moves. See those measured moves there in pink? Multiple measured moves. So my expectation is we're likely to get tangled there. These are mathematical equations, so I don't put too much faith in them. And then I expect us to balance out for the afternoon. Again, non-farm payrolls tends to have a move early on, and then people tend to leave early. I don't remember what last month's looked like, but I generally don't have a huge expectation. I think last month actually had a pretty good move, but I tend to not have high expectations. On the open, on the secondary, we push immediately higher, push up against 30.55, come back to 30.50, and then pull back, and then start to work through this 30.41.50, which remember is the overnight mid. Overnight VWAP area and overnight point of control. I expect us to come back in here and come back towards the close to bounce back up. It may even push back out before it stops. So that's the secondary scenario. Because we're opening in a gap in new all-time highs, there is a higher potential for an open drive, open test drive type of behavior, because we are likely to see systems kick in as moving averages, break envelopes and blah blah blah. So pay attention to that. I'm not going to draw those scenarios because I just don't have any references to work off of for that. But just pay attention to that. I'll be redoing my measured moves this weekend to see if there are any swings that can be projected higher than what I have here, because I've run out of room to the upside. 30.59.75 and 30.57 is about as much as I can get from the recent past. So I need to go farther back to see if there are bigger moves, maybe on the weeklies or something. That would give a pretty decent projection. It's like tarot cards or voodoo magic at this point, projecting prices into new areas. It's not something I'm comfortable with, but it does give a guideline as to what areas to scale out at if we're long into them, and potential areas where the market might stall. I prefer to use the auction from the past, but since we've never been here, we have no footprints to work off of. Anyway, it is Friday. Good luck to everybody, and just hit me up. Again, futurestrader71.com/contact. Reach out if you need anything. Good luck.